What's going on? Welcome back to the channel. So today when I talk to you about ticker iQST, I want to go over some of the current data points, latest and updates from the company, and why you really need to add them to your watch list. Before we get into any of that, make sure you guys hit that thumbs up. And with that, let's get right to it. So at the time of doing this video, it is sitting at 457. Did get hit quite significantly with the broader market today. It went down 7.22%. Last time I did a video was on October the 21st, where I went over some of the data points and how I did see in the short term for it to really appreciate. So it went from around 596 to a high of 639. But regrettably, it's really failed to get the attention from big institutions. So it's been kind of going down with the broader market, but it is at a pretty discounted price. So I want to go over that in a second. But as well, I also did in my earlier video, went over exactly what they're all about, why also a lot of through their subsidiaries are going to be making some pretty big changes and expanding with the broader market. So definitely pop over and take a look. But this is some of their subsidiaries, so telecom, fintech, and AI digital. Aside from that though, right now, market cap is sitting at 17.75 million. They just announced their earnings. And so this was on the 5th, so November the 6th, on which they did report net revenue of 102.8 million. That is an increase of 42% compared to their last quarter of 72.1. This, I'll leave this up here for a second. So if this is your thing, feel free to pause it. I'm not going to dive deep into the earnings as much as I would like, only because I did cover a lot of that in my earlier video. If this is, again, if you want maybe a follow-up video, let me know in the comments below. But you can kind of see right here under the Q2, you had that 72.18 million. Another thing to take note of though is cash and cash equivalents is 2.04 million. Once again, their market cap right now is sitting at 17.75. So this is a all around very discounted play. And a couple of things as well really does portray that. So under seeking alpha, so right here, so the factor grades, this is the quantitative data. And so profitability, it's not profitable right now. Momentum is a F, and that's largely just because it's going down with the broader market. Once it does get on institutions' radar, then this will change very, very fast. And on a side note, it does also have fairly low volume, so it won't really take all that much to really move higher. But valuation is a A+, and growth is a B-. So even though the market right now is punishing a lot of tech and AI stocks for their kind of arguably very high multiple, this is acceptable. And plus, like I said, it's not profitable right now, but quickly going over here, so this is some of their peers, but looking at the PS ratio, it is at 0.041. I don't think I've ever looked at anything that is more discounted than this stock right here. And I get it. Instantly, once I bring this up, usually people jump to the conclusion that, oh, they're just diluting, it's just convertible products. That is not accurate whatsoever. So this is some of the highlights that you should kind of take note of. So it is a debt-free company, no convertible notes and no warrants. And so for those of you that are familiar with my channel, I actually kind of target and call out stocks that do rely on convertible products such as preferred stock and notes. So the fact that they have no debt, no convertible notes, and is as discounted as this, definitely, hands down, does need to be added to your watch list. A lot of other good information right here, but mergers and acquisitions, since 2018, there's been 12. So pretty good stuff. Revenue mix, 80% telecom and then 20% fintech. And most likely over the next couple of quarters, I could definitely see that really changing, fintech going up quite a lot. But again, I think just based on a value standpoint, this needs to be really added to your watch list. And one thing that I generally like to do on a lot of my videos is bring up shorts, just as more of an indicator, not necessarily because this is a squeeze play, but at the time of doing this video, 4.3% of the free floats being shorted, works out to be 141,000 shares. So shorts, if they really did feel that this stock was just overvalued and was going to go down, they can easily double, triple, quadruple down. Cost to borrow average is 5.7, so that's an annual rate, not a daily rate. So that is as well on the low end. And despite it not being heavily shorted, DTC does work out to be 1.55 days. So that does signal that shorts, even though there's not much of them, based on the volume, they are rather overextended. So that does factor in the average volume for this stock in comparison to number of shares being shorted. So I think just from a value play, there's a lot of kind of interesting pullbacks that is happening in the broader market. But this one definitely does need to be added to your watch list. So let me know your thoughts on that. If you do want more of a deeper dive into, for instance, your financials or some other attributing factor in following videos, let me know in the comments below. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.